All right, so hi everyone, and welcome to another episode of the Clopton Capital CRE podcast. Today we have Shane Giles. Shane is currently serving as a managing director of the Giles Group, a full-service commercial real estate brokerage, leasing, and consulting firm. His experience includes the management of over 600 commercial real estate locations throughout the United States and all commercial real estate asset types. So Shane, listen, appreciate you jumping on. Great to have you here. And maybe you just give us a little bit of background and intro on you and Giles Group and kind of how you got to where you are. That'd be great.
Absolutely. I appreciate you having me on. So I got my background really started when I was born. I was born into a family of contractors and investors and developers. So I was kind of born into it and introduced at an early age and kind of grew up in that. After I got out of the military in 2009, got a college degree and moved right into the commercial brokerage side. Did a short stint with Dollar General corporate office, and since then, and just been plugging away. Started my own company, the Giles Group, as of December of 2020, right in the middle of the pandemic, and doing well. I mean, it really seen growth.
Good. So what was that like, kind of going off on your own during the pandemic? I mean, I assume the idea to go off on your own was, happened before then, but, time is not always perfect, right? So kind of had to deal with it.
Yeah, absolutely. I think anybody in the business, the brokerage business, kind of has that entrepreneur mindset. So going out on my own was always in the back of my mind. The reason and the rationale for it at the time was really trying to serve the market better. Technology is kind of lagging behind in the brokerage industry, and I felt like I could do it better than where I currently was. So, we implemented some technologies and started to grow. We've got 3 people working with us right now. As for doing it in the middle of the pandemic, by the time I started this, we'd already seen an uptick in the market. After the pandemic was, the vaccine had started coming out at this time. So things had changed. So I was a little bit more comfortable about where we were than, the beginning of the pandemic.
Right. And what areas do you cover? Where are you guys located?
We're in Nashville, Tennessee. So basically the middle Tennessee areas where we really cover. That'll be Nashville, Tennessee, Brentwood, Tennessee, Murfreesboro, Tennessee, and Hendersonville, Tennessee. Probably about a 30-mile loop around Nashville is our main area. Okay,
got it. And you guys cover brokerage, leasing, kind of consulting for any asset types located anywhere kind of in and around the national marketplace?
Exactly. We really don't do as much multifamily. We have had experience in it, but our strongest asset type is probably industrial and flex. We also do retail and some straight office space too.
Okay, got it. So I mean, Nashville obviously is kind of on fire right now. We've done and are doing a bunch of deals in Nashville. Like what have you kind of seen in that marketplace? Kind of like what happened like during the pandemic, and then what's kind of happened afterwards to like the general marketplace and the assets you guys cover?
Yeah, absolutely. So I'd say around February of 2020, when the pandemic hit, I think it did the same as it did in every other market. Everything stopped. The capital really dried up. If you were representing a tenant, the deal stopped because they were nervous about what was going to happen. Landlords became very nervous about things. And I would say that lasted really up until about August of 2020. About that time, we started seeing, the vaccine was on the horizon. People started understanding, how to live this life of distance. Zoom became very common for these meetings. So we started seeing some positivity there. I would say by about November, December, we saw a strong uptick. But I would say that office was lagging behind at that time. Industrial stayed hot throughout the pandemic after, I would say, about May timeframe. The reason for that is I think it was probably January, February timeframe of 2020. We had a tornado come through Nashville, took out about 2 million square feet of industrial property. And then the uptick for manufacturing to begin with, it just really made it a feeding house on the industrial side of things. Now, moving into 2021, we've seen an uptick in retail also. And the office is still a little soft, but the Nashville market, we just got an investment of $1.5 billion by Oracle, bringing in 8,500 jobs. Amazon's committed to the area. They've already got some warehouses. So, I think all that with the strong, we have a strong medical field here with Vanderbilt employing lots of people. I think it's really kept the market strong here and, kept us in business.
Got it. Got it. Got it. No, yeah, that's great. We actually recently did an industrial deal in Nashville, and yeah, I mean, very very strong, lots of great comps, and asset values have really gone up. Great. So have you on the leasing side, since the pandemic, have you seen, like tenants wanting to write kind of like maybe like new covenants and leases that have to do with like shutdowns or anything with the pandemic or stuff? I've heard, other leasing brokers kind of talk about this. I'm just curious if you've seen it happening in Nashville.
Yeah, absolutely. I haven't seen it with as many of the small and mom and pop shops, but some of our national retailers have definitely started, inserting clauses in there that kind of provide some protection to them, especially some of these, rent plus a percentage. Uh, they're trying to mitigate risk in these times where we do have a downturn. So, I think it's going to become more common, but I think it's going to be more common with national tenants, the ones that kind of have a little bit more leverage than the mom and pop shops.
Got it. Got it. So you're seeing, right, like the national firms kind of, are you seeing anything as like written in there as far as like free rent or like rent clauses trying to get built in, stuff like that?
Exactly. You're seeing people try to write that in. Now it's for free rent. I haven't seen quite free rent, but I've seen things like rent pauses in these kind of emergency situations and way to mitigate these before they even happen, if that makes sense. It's really about limiting the risk exposure to a downturn in the market is what they're trying to do.
Got it. Got it. Okay. So they're saying, hey, maybe we get shut down again and we don't want to, right, like have to come back to the negotiating table and like try to stronger than somebody.
Exactly. But I think it's beneficial to go ahead and talk about that up front with the landlord, because really and truly the tenant and the landlord and the brokers involved are a team. The landlord wants the tenant to be successful, therefore he's collecting his rent. And I think talking about this up front really will help in the future, because we had so many tenants unable to pay their rent, kind of squatting because they were able to, and that hurt the landlord in the long run. So if we can talk about this up front, get it worked out beforehand, I think it just works better for all parties involved.
Yeah, I agree. Is that mainly for retail guys, or are you seeing that for like office and industrial? Or
I've mainly just seen that in a couple retail leases where they've tried to insert things like that, trying to really just head the problem off before it comes. But I haven't seen anything like that in any industrial or office. Office, like I said, still been pretty slow. Most office we're seeing go through right now is a flex space. A little bit of warehouse in the back and some office up front.
got it. Yeah, I mean, have you seen? I mean, I think industrial rental rates are holding up well and going up, right? What's happening kind of like in the office space and in retail space as far as like lease rates and stuff like the guys pushing back on triple net structure, stuff like that.
Yeah, absolutely, but not as much in retail. The market in retail here, vacancies already have gotten low again. It's gotten very competitive again. So you're still seeing the normal looking for some free rent up front. That really depends on the term of the lease. We're working on some 15-year leases, so we've got about a year's free rent worked into a deal. So you're seeing some of that, but all in all, the retail side of things here have been relatively strong since 2021. So you're not seeing too many concessions, if that makes sense. But that's why you always get someone, a professional that has seen those, can actually give you a little idea probably before you even get to the negotiations where things are going to end up. Now, as for office, it's still probably one of the softest. So we have seen a lot more, I would say, free rent involved, a lot of TI for fixing up offices. But all in all, offices still stayed a little bit soft compared to retail. Retail really rebounded a lot quicker here. It's going to be interesting to see what happens with a lot of this office, a lot of people staying home. I've seen some talks about going and converting to multifamily. It'll be interesting to see, and that's not just here in Nashville, nationally, what people do with some of this excess office space. Because I don't think we're going to see, quite the volume of people going back to the office.
Right. Yeah. I mean, are you seeing like with new office leases you guys have written? I mean, are you seeing like smaller on average spaces that people are wanting, or shorter leases, or something like that?
Absolutely. Everybody's wanting a little bit shorter lease these days and smaller space. I'm actually seeing a lot of companies do kind of a flex schedule where they only bring a percentage of their employees in per day. So you pick 2 to 3 days a week, and those will be your days. So they're able to operate out of a smaller workspace. Plus, it gives them the work-life balance, time with family that they were looking for and wanting to stay home and work.
Right. Right. Yeah. So I mean, so I saw you guys maybe cover a little bit of hospitality. Are you guys seeing like a lot of like business travel to the Nashville area? I mean, that's one of the big parts of hospitality that like, we're still kind of missing, right? Like business travel just isn't happening. Just curious what's going on in Nashville with like conventions and business travel and groups and stuff like that.
Yeah, absolutely. I think hospitality hotels have been affected probably more than most during the pandemic. The market is still a little slow here in Nashville, but we opened up and pulled the mask mandate off a couple of months ago. As for business travel coming in the area, it's definitely coming in. But I would say more than that, it's the tourism that has picked back up. Nashville downtown, very, very busy. So hotels are, getting closer to capacity, which I know has helped everyone out in the business. So I would say it's probably a tourism thing here, really driving the occupancy in the hotels for us more than a business travel. But I do believe that businesses, we're seeing a lot more tenants that we represent actually coming into town for site selection now and not doing as many things remotely. So I've seen an uptick in both, the tourism and the business travel. But being Nashville and kind of a destination party town, I would definitely say it is our tourism that is really driving our capacity, reaching our capacity at our hotels.
Gotcha. Yeah, I mean that's one of the areas with business travel that I think maybe never died or is going to come back to that. Like anything to do with real estate, right? Like I just don't see how you really do a site selection without actually seeing it, right? I mean, a drone video just doesn't really capture the full feel of it. So.
I don't completely understand it myself, but I will tell you, we've actually closed a couple of deals where it's been sight unseen tenant representation because they just weren't, their rules or regulations within the organization wouldn't allow them for putting an employee on the plane to go. So they were hands tied, but still wanting to open location. So it's kind of a difficult thing. But overall, I would say most tenant rep deals we did, people put boots on the ground like normal. So I don't think the business people really stopped flying as much as the tourists did.
Right. Yeah. I mean, it's interesting that they had the rules to not do a site selection because they didn't want people there in person, but it's a physical brick and mortar location that's going to have people in and bring it. Right. So it's the conflict there is just interesting.
Exactly. And I don't think it would have been possible if they didn't have experience in the market already. So they'd already had locations in the area, so they were familiar with the area. But still, anytime that I'm representing the client, it's always, when can you get here? When can you take a look at it? It's really hard to look at the facts and figures on a computer and look at Google Maps and really get the full picture of what the building or the asset is you're looking at.
Right. No, I totally agree. So like, what are some of the challenges that you're seeing? Maybe like some of the owners and investors you deal with, kind of in and around that market in these asset classes. Like, are there any specific challenges that guys that have owned property throughout the pandemic are still kind of having trouble with? Or like guys that are trying to enter the market. Like what are some of the biggest issues that you see some of these guys having?
Yeah, it's really a two-part. If we go back to the beginning of the pandemic, people that were, already established and we were working on deals, it seemed like some of the capital dried up to get these deals done. I think we talked about a deal at one point. Unfortunately, it fell through, but it was somewhat difficult to get capital at that time. The second part of that is landlords were going through this. There was a significant amount of tenants that weren't able to pay rent, so that really makes it hard for them to meet their debt obligations every month. And then, it just kind of snowballs from that point, the longer that people cannot, pay their rent. So one thing I will say that was pretty good, our market wasn't too soft. So a lot of our tenants stayed in place, and that's why our retail's probably doing as well as it is. Office, again, is the softest. And then the third part of investors trying to get in, I think now with Nashville's price is so high, it's made it very difficult on the buy side. Being a new investor trying to get into commercial from residential or whatever asset you're typically investing in, I think it's really trying to, the big challenge is get your team together and show that you can, take down that asset and manage it. And you've got all your everything in a row, if that makes sense. I think that's what a lot of lenders want to see now. And the biggest issue really is the price.
Right.
It's hard to get a good deal in Nashville right now. So I've got questions on if things keep going up or where they're going to be before we're all said and done with this. But, I think if anybody could predict that, they wouldn't need to work anymore.
Right. No, I hear you. I hear. So when you're kind of like representing somebody or on the sell or buy side, like, are you seeing more movement kind of on the bids than the asks? Like sellers just not willing to really do any movement at all, or?
Well, no, what I'm really seeing is I'm seeing sellers really push prices way above asking price, even if that makes sense. We're seeing a lot of things get into bidding wars. So they're really just pushing the price higher and higher. And it's making it harder for a smaller investor to actually break into the industry when you're competing into a lot of industrial investors, really established investors. They have the tools. They're able to move quicker. And, they kind of have a little bit more risk tolerance for that higher debt than some of these smaller mom and pop or newer investors, if that makes sense.
Yeah, and I mean, I could certainly see that in industrial, and we saw that recently. But I mean, are you seeing that in like retail and maybe guys that are getting out of office? Somebody's coming in to buy like an office building around there. Are you seeing the same sort of like bidding wars going on?
Not as much in the office. We've seen a couple of the big towers in downtown come in, get bought out. They know that office is going to pick back up, and it's a good deal for them. Most of what I'm seeing bidding on is retail and industrial and flex. Like I said, retail bounced back very quickly. Industrial just never went anywhere. I think that, like I said, was kind of the effects of the tornado and the pandemic at the same time really strengthened that market. So we've got a lot of industrial go in. We've got a lot of retail being developed. The only thing we're not seeing a ton of still is office building, which, they're going to complete a lot of the offices that have already been going on downtown. I think over the last couple of years, we've had about 22 cranes up in the sky, which is, pretty high for Nashville. We've had a lot of construction going on. So I think we're kind of catching up. And then COVID on top of it's going to keep it kind of flat in the office sector for the next couple of years. Trying to predict any further in the future on that's going to be difficult because we really don't know how employers and employees are going to respond to going back to the office. That's going to be probably one of the most interesting things for us to watch as we move forward is, what percentage of the employees actually go back to the office.
Right. Yeah. I mean, I think there's something to be said for certain positions that don't necessarily need to be, I don't know, like accounting or something, right? I mean, some guy that just goes in, any position I feel like that you just go there and you shut your door and you don't talk to anybody all day and then you leave. You could probably do that from home, right? As long as you're not the personality that's just going to sit there in your underwear all day, right? But there's just other positions that I think like right now people think, yeah, I'll stay from home, but they don't realize how easy it's going to be in the future for employers to, right, like fire them, or like kind of like what the upward mobility looks like when you're not learning from like senior guys at the office and what promotion, who's going to get promoted, right? Somebody that's at home all the time or somebody that's at the office with the senior guys. So it'll be exciting. I do think it's gonna come back, probably in like the near to medium term, but there's definitely right now a lot of pushback. And was there like a great migration of jobs, people trying to maintain that, Zoom lifestyle from the pandemic? So.
Absolutely. And, you look at companies like Oracle that are, putting $1.2 billion into Nashville for a campus, moving their headquarters down here. They obviously believe that the office market is going to come back. They're bringing their employees back. And they're doing so successfully at a lot of these locations too. So, I think, like you said, short to medium term, we're going to see, a lot of the occupancy rate go back up in office. And the people that are investing in it right now are probably going to get some of the best deals too, if that makes sense. Higher vacancy.
Yeah. Absolutely. And so are you seeing you seen any assets in Nashville, like office assets being bought up to be repurposed into like other stuff. Yeah, I mean, you mentioned multifamily. I'm curious to see like other assets, kind of being converted from office.
Yeah, mainly what we've seen is seen office go into multifamilies. The main use we've seen for it. There was actually a different conversion. We took an industrial building to an office purpose not long ago too, which I was kind of surprised to see in this. But it was an area that didn't really have it. So I think it actually has been pretty successful. I haven't followed it, in that detail, but I think they're running around 90% occupancy already in it. So it's kind of an interesting thing to see. It doesn't really fit the mold of what you think should be working right now in the market, but it has worked. So anytime somebody tells you they know 100% what's going on, they do not.
Right. No, I hear you. So what do you kind of see, in the future, man, for like the national market? I mean, are there certain neighborhoods around that marketplace that you think are up and coming and are going to be really like the next pathway of development, or like where can investors kind of be looking there to get in and find deals, or like how do they do that? Right.
Yeah, absolutely. So I think some of the best places to get in, if you're wanting to get into the Nashville market, would probably be East Nashville right now. It's up and coming. You're seeing it's actually becoming developed rather quickly because the market has bounced back so well. It started before the pandemic, of course, but I would say East Nashville, the outskirts of West Nashville, and the Nations area is a good area. And then anywhere down 65 and 24, Interstate 65 and 24, to include the Williamson County area, Franklin, Brentwood, and then going down the 24, which is more of a blue collar, the industrial corridor. Anywhere in those areas, you really there are deals to be had. I think I would probably, if I had to pick, it would probably be going down 24. It'd be Smyrna and Laverne. There's a lot of areas out there around Nissan, North America, and places like that they're really positioned to grow. They've got the jobs out there, and now we're starting to see the residential really fill in. So I think you're going to see more and more people pushed out of the downtown Nashville area from affordability and kind of keep developing that area out. So getting in there beforehand is really, the way to get ahead, if that makes sense.
Right, right. So you're kind of looking at like East Nashville and then like the outer ring of like the downtown area.
Exactly.
Like, got it. Okay, so like moving price points is going to push people out.
That's exactly what we're seeing happen right now. We're seeing businesses kind of leave Nashville. A lot of people aren't wanting to be in the downtown area after COVID as much. Downtown kept a mask mandate for a long period of time. Just a couple miles outside of the city, things were very different. Rates were much lower. So we're seeing a lot of people actually move out here from different states. They move to the outskirts of Nashville. They like that there's no sales tax here, or no income tax here. They like that the prices are a little bit lower on the outside. The quality of living's out there is better. And then the commute's really short. So you're seeing a lot of people move to the outskirts where it's being developed and they have jobs, so they don't commute as far. Travel time's better, quality of life is better. And like anytime this happens, it's actually just driven the prices up outside of Nashville also. So we're seeing prices rise out here too. So,
Sure.
It's interesting to see. It's a growing city. It's grown extremely fast in 10 years. I think we had over 100 people a day on average moving here. That's just people that are buying homes, not people that are sleeping on couches. So it's growing very quickly. We've got Amazon coming in, Oracle coming in. We've had Dollar General expand, Tractor Supply expand, and then all the medical universities here. So it's been exciting.
That's awesome. Well, where are you seeing a lot of the influx coming from? I mean, I know, I'm in Chicago. I've seen a ton of people from this area, kind of go down there, but we're not too far away. Are you seeing like East Coast or West Coast, or what?
I can't say East versus West or North. I'm going to say where I've seen most of it come from are highly densely populated areas with higher tax rates and higher cost of living.
Chicago fits right into that.
Exactly. I think that's what we see. A lot of people want higher, I would say, quality of life. You keep more of your money down here. It seems like you have just a little slower pace of life is what I get from most people that come here. They really enjoy that portion of it. And then with COVID and everything, I think it forced people out of a lot of these cities too.
Sure.
We had businesses actually close up in New York, and they moved their businesses down here right in the middle of the pandemic because they weren't able to operate their business at all up there.
Oh, yeah.
So they kind of folded the doors and found a place that was more pro business during that time frame.
Sure. Yeah. I mean, I've seen, a couple of our investors, liquidated portfolios in Chicago and kind of moved out to Nashville to do the same thing. So yeah, I mean, I've seen it more than enough around here. Yeah. So listen, I really appreciate all the great info, man. Why don't you tell me a little bit about like what you see for like yourself, the Giles Group in the future, and where you guys are trying to go, and kind of what do you see in the future for yourself?
Yeah, absolutely. Hopefully I'm still working with the Giles Group because if that happens, we close, of course. No, growth is what we're really planning on. 2021's been excellent for us. We really plan on growth. We've hired on a couple new people. We plan on expanding into a couple other markets to include Memphis and Knoxville. And there's some negotiations and talk of possibly opening an office down in Atlanta. So, really growth. We actually want to start moving towards the multifamily asset a little bit more. The problem is it's extremely competitive. As you know, I'm sure right now, pretty much anywhere you go, multifamily.
Yep.
So that's really what we're looking to do is really grow the business and to be able to serve our customers throughout Tennessee and then start moving into a couple other states. Other than that, it really is just, trying to provide that quality of life and work balance is what we're looking for throughout the organization. So, all exciting things. Just hope things continue the way they have been, if that makes sense.
Yeah, no, I hear you. Right. Totally makes sense. So listen, how can people get in touch with you? If they want to chat about national market or some of your services, or just chat about deals in general.
Absolutely. My cell phone, 615-714-8502, or you can reach me at Shane at thegilesgroup.com.
Sounds good. Well, listen, Shane, I appreciate you jumping on. This is all great information about Nashville, and I think some good, advice and information on what investors would be looking for going into the market. So, listen, I appreciate you jumping on, and hopefully we can talk again soon.
Perfect. I appreciate it.